Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, April the 8th. Okay, a big reversal day yesterday in the markets. We were kind of expecting it. We have been leaning into the short side of this market, and this morning we're going to be going over some intraday charts, in particular the 4-hour charts, to identify as to whether or not we believe we're going to get a continuation break of this market. Will it happen today? I don't know. I'm not that smart. But the probabilities are very high that it's going to happen very, very soon. Why? The reason is that we have history on our side. We can go back in times past. We'll bring up our same old charts, nothing new here. And I want to first go to this chart, which I've been referencing. We are here. Right here. Where the heck is my... It's hard to see. But right here, upper right, we have that feeling of a return to normal in this market, and that's going to end up hurting a lot of people. So we don't want to get lured into a false sense of security. In all probability, we are going to break, and we have over 500 reasons for them. What are those reasons? One is that we have the unemployment report coming out tomorrow. Remember that last week's report, while it was horrible, reflected only the first 2 weeks of March. What other reasons do we have? We have the S&P 500 coming out with earnings, not to mention the smaller cap names. I'm having some serious problems with my mouse here this morning, and I'm getting ticked. Okay, a little bit better. All right, so this is a chart of the financial crisis. You can see back during that time, we had a bunch of counter-trend rallies, and each and every time we broke until we didn't. We stopped going down at some point in time. At some point in time, that'll happen again, but until such time, until we get a washout in this market, until we get capitulation, in all probability, we are going to roll over again. When you take a look at where we're at, TA, good morning, brother. On the Dow Transports, does this look familiar to this chart here? Right, so we want to take our crayon out. And if you don't feel like shorting, don't short. The purpose of this conversation is to simply not to get lured into a false sense of security and begin buying stocks because you have some long-only fund managers saying, this is the buy of a lifetime. It makes me physically ill. So don't get lured in. Does this look anything like this? I would argue it looks pretty darn close. Good morning, Richard. All right, so let's get to the pre-market activity. First, I can't wait to short China again. This is off of Zero Hedge. China forces Italy to buy back PPE it donated, personal protective equipment. This is the same equipment that the Italians donated to China in the beginning of the crisis. So the Chinese give it back to the Italians, and they try to charge them for it. Yeah, I'm going to share this. Before the virus hit Europe, Italy sent tons of PPE, personal protective equipment, to China to help protect China, protect its population. China then has sent Italian PPE back to Italy, some of it, not even all of it, and charged them for it. A senior Trump administration official told The Spectator. Incredible. And yesterday, stocks surrender, biggest intraday gain since 2008 as crude crashes. I wouldn't blame it on crude. But we knew this was coming. Let's check out the pre-market activity. Okay. So we'll begin with the NASDAQ. Let's clear this all off here. Yesterday's price action. And when do we know we're in trouble? When we break below this lower band of support here on a 4-hour chart. These will all be 4-hour charts. You can see that we were higher, only to reverse, and this bar here in green just opened up 7 minutes ago. We are up currently 12.5 points. Again, we were up higher. And we have been shorting the NASDAQ 100. And I don't plan on adding more, unless it gets really crazy to the upside. I don't plan on adding more until we get a break of the market. This is a mess. Again, I want to clean this all up. Okay, so you can see we've been looking for counter trend rallies and breaks. And we've been getting them. Right? We're looking for the same thing yet again. And here we are. Excuse me. Okay. So if we begin to break out, we know that we're wrong. But if we begin to break down, the probabilities of us being accurate rise dramatically. And if we break this lower band support here at around, let's just round it up, let's call it 2,500, then we know that we're going to see a resumption of the selling. I had thought we were going to get up, honestly, to the 2,800 mark right here. And for all I know, we still may, right? But We just went negative. It's not looking good. With the unemployment numbers coming out tomorrow, it's not looking good. We have earnings from the big banks, which is set to begin next week. I believe it's Jamie Dimon who reports as well next week. And he doesn't pull any punches when he speaks. So I'm not predicting a very cheerful report out of him. Let's take a look at the small caps. You know, they weren't horrible yesterday. They did reverse. They did manage to eke out a gain. But you know, this is just, it looks like a rounding top on the small caps. And nothing fancy here, folks. Just simple. I dare you to cross those lines being laid out here. And we sit, watch, and wait. And I was talking to my son. I've been talking to him a lot more frequently lately, texting and whatnot, because this is his first real serious bear market that he's trading, and he's a bit frustrated. And the coaching I've been giving him is you have to wait. You have to wait until the final minutes of trade. That's when the institutions begin to decide what they want to do for the following day. How are they going to position themselves? And if you do that, you'll be ahead of the curve. But if you try to chase this market early in the morning, you're going to get burned. And sure enough, yesterday was a perfect example of what happens when you chase this market in the morning. You know, simply take a look at a 15-minute chart. Ugh. Only when I'm live. Please stop. There we go. Here's Tuesday's price action. We woke up. Everything was right with the world. We're going off to new all-time highs. That all ended here. 10 a.m. outside reversal bar. Here we are today. So at current, we're up 1.6%, 1.14%, 0.4%, 1.4%, sorry. It's still very early. We're in a triangle formation. We're looking for a potential break on this 15-minute chart. S&P 500. Again, we woke up yesterday, all was right with the world. That all ended here around 9:30, right at the open. And we trended down. Let's clean this up. We trended down all day long. And what we have here, if you look closely on this 15-minute chart, is the potential of a head and shoulders setup. Left shoulder, head, right shoulder. And I really don't like 15-minute charts all that much, but for illustrative purposes, I'll use it. Here is your neckline. So just be very, very careful here on a break below 2620 on the S&P 500, because we could head very quickly down to let's call it 25. Yeah, 25.65 works. So just be careful here. Let's pull back. 4-hour chart again. Keeping with that higher level view. And when am I wrong? If we break out above this upper band of resistance, and if, in particular, if we close above on a 4-hour basis above 27.45, that sets us up for a rally up to that ultimate price target of 2,800. We may get there, but given the fact that we have the employment numbers coming out tomorrow and the start of our earnings season, each minute that goes by with the avalanche of news coming out of these companies, it's going to be more and more difficult. So I think that yesterday's price action was very, very bearish. Lower highs on RSI. Just watch for a break here. You can see that we were higher. Now we're rolling over a bit. Watch for a break below support. And again, we're satisfied at current with our short position. We'll be looking to lean into that short position far more aggressively were we to break below, just like it happened back here. This goes back to the financial crisis for those just joining in. And if I could ask you to hit that like button, I'd really, really appreciate it. Thank you so much. I'd be looking to lean into the short side. This goes back to, again, the financial crisis. If we were to break below these lower bands of support, right? So we are here. We're up at these, within these bear flag setups. We haven't broken the lower band of support yet. Once we do, especially when we rally back in an effort trying to recapture the lower band of support, then on a continuation move lower, lean further into the short side. But at current, on the transports, we're still flirting with trying to make higher highs here. And this is just a market in absolute and utter denial. But once we begin to break down below these lower bands of support, it's game on to the short side. Let's take a look at the S&P 500. Here's a weekly chart. We're well off the highs of the week. There's one chart in particular. I don't want to waste everybody's time. There's one chart in particular I wanted to share. If I think about it, we'll do Thursday night stock charts live, and I'm going to bring up a host of charts that that'll be interesting. And those charts will be updated after we get the employment numbers, the unemployment numbers coming out tomorrow. So stick around tomorrow night. We'll be live 6 p.m. Eastern Standard Time, and we'll go over some higher level view charts. Taking a look at gold. Gold has me a little bit concerned, despite the fact that we are at current up. But what happened yesterday was that when we awoke, we had been up to a high of 1742.6 the ounce, only to give it up. And then we broke down below this lower band of support here. And now we're trying to rally back a bit. So my antenna is up for gold at current. I'm growing a little bit worried short term. Longer term, I think it's going higher. So I'll be watching for a breakdown. Let's lay this out a little bit better here. Make this yellow. Make that stand out. Okay, cool. Now, if we recapture, ideally 1700, all is good with the world. But I'll be concerned about a break below this lower band of support here. Let's check out silver prices. Silver is down slightly. We're flirting with a potential move higher here. So I wouldn't go adding to our silver position at current. And I would grow concerned, similar to gold, if we break down below this lower band of support. Right now, it's just a watch. But if this market begins to weaken up, meaning equities, if equities begin to lighten up, you may see more of a liquidity squeeze. I wouldn't expect it to be as heavy on gold and silver as it was during the initial break of the market. But people will leave it up yet again. They believe they're in a new bull market because we've had a big rally off the lows. They're leveraging up on margin. Guess what? Those same people are going to get squeezed on the way down yet again because they're buying high and they're going to have to sell low. So be very, very careful here. Check out the dollar. The dollar is up about a quarter of a percentage point, but I'm concerned about the dollar on a daily and intraday basis. I went into this great detail last night on Market Wrap. We saw a decline in bond prices yesterday, in particular the 20-year bond price, a rise in yields, and a drop in the dollar. Hey, Sam, good morning. How's everything over in Italy? Jedi Kid, good morning from Louisville. Your lips to God's ears, Jedi. Ezra, isn't everything following SPY and Dow right now? Even Bitcoin? SPY went down and took GLD with it. No, I wouldn't say that. Gold has its own personality. Gold, and including the miners, they trade. Sometimes they trade inversely of the dollar. They'll trade with the dollar at times in fear. When yesterday, you had a point when we were rallying the other day when you saw the S&P 500, the Dow rip up higher, and gold went along with it. Usually, that doesn't happen with the severity that you had, because when you have a risk-on day in equities, who the heck wants gold? And gold usually lags, even pulls back, but people were buying up gold along with equities. So I wouldn't say that that's that everything's following the SPY. No, I wouldn't say that. And see, you have Bitcoin right now, even Bitcoin. Let's take a look. Before we leave the dollar, watch for a break here. I don't like the fact that we are weakening up on the dollar and bonds at the same time. It makes me nervous. All right, so here's Bitcoin up. Whereas, as a matter of fact, and here's the SPY, which is rolling over at current. So, no, at least on the very short-term basis, we're looking at a 4-hour chart here. It looks as though you have the spiders, which are going to break and move lower. Versus Bitcoin, which is up and could quite possibly be flirting with a move higher. So if I had to be long, I would definitely want to be long the I would definitely want to be long a Bitcoin versus the S&P 500. So Bitcoin looking pretty good here. Sam, good to hear, Sam. Are you trying to exit from the lockdown? That's good to hear. Good. Yeah, the Germans aren't. They're shooting themselves in the foot, aren't they? What do you? What's? Will I'm going to ask you a man on the street question. In 10 years, will there be an EU in your opinion? Given the sentiment in the street, for those folks not familiar, Sam, who's typing in the chat box, he lives in northern Italy. So I always like to get Sam's opinion for what's going on over in the EU. So I appreciate you bearing with me. Robert, has the market bottomed, or do you think that there's a long way to go before that happens? Me personally, I think we have a long way to go. I think that what we're seeing at current, Sam, lots of hate versus Germany, you guys. All right. So that's kind of what I figured. And I don't see that changing anytime soon. All right. Thanks, Sam. I appreciate that. So, Robert, back to your question. Do I think that we're going down lower? In all probability, we're going to go down lower, yes. And we've been positioning that way. And frankly, earlier in the week, this, as I was stating my bearish concerns about the market, I was steadfast. I was saying it here on the 6th when we were ripping up higher. I was saying it yesterday morning as the futures again were flashing a continuation move higher. But we were leaning into the short side, did so more yesterday afternoon, very close to the close, and we're looking to add more, but only on a break, only when we're validated that we're seeing a breakdown in the markets. So that's what we're waiting for at current. Alex, morning, mate. Hey, good morning, mate. I always wanted to say that. From London, enjoying the stream. Thanks, Alex. Appreciate it. Thanks for joining in. How are things over in London, Alex? What's the man on the street thinking over there? especially with regard to the well, you're not part of the EU, but how how is the feel in in London relative to? Uh, I'm interested in China and your feelings against them, or with them versus them, and what's the man on the street thinking about Germany in particular, and also how are you faring in this market? I mean, in this environment with this crisis, the CCP virus. Let's take a look at. Here's the European ETF. It's very similar. These global markets are very, very similar to the U.S. markets. Here's your gap up higher. This is simply a dead cat bounce on the European markets as well. And where was the top yesterday? Right here. The December 18 lows. We just came just shy of it yesterday. Thanks for your input. How long do you think until we hit that valley? I'm Robert. I'm not that smart. I don't know. I love macroeconomics. Um, I don't know how long it's going to take. I think that the errors that we're making here in terms of policy are huge. We continue to uh, refuse to allow the free markets to unwind this thing because the pain is too great, especially in an election year. They're not going to let that happen, and you have to blame everyone. That's the Democrats and the Republicans, everyone, and the Democrats are loving this. This is in their wheelhouse. We're inching towards socialism. You have these central bankers that are just buying up everything, and they want to buy stocks, and you could argue that they're in there buying up stocks. So as long as they continue down this path, they're gonna prolong that ultimate day of reckoning. I'm currently in Japan, and thank you for your stream. Oh, you're very welcome. Alex from London. Hard lockdown, probably going to be extended for another month or three. Main issue with China is the lack, and they delayed the. So, all right, so you get that same sentiment there, and that's the same one here. Getting into the U.S. stocks, so thought you would be a good start. Good, thank you. Russ, the economic impact has not been felt yet. Very, very true. Very, very true. And it's sad. It's very, very sad. If you want to take a look at, here's the 2000 bubble. We had so many fits and starts, and this was my first bubble. I remember this. If you couldn't make money here, I was selling puts. If you couldn't make money, this is back in 99 into 2000. I mean, nobody thought about shorting. Nobody. Why would you short? And then I was walking here March of, where is it? March of 2000. Right here. I was here, right here. I was walking through Times Square. I was selling puts on PMC Sierra. They're no longer around. They were bought out at 160 strike. 160 strike price. And I took a peek through the NASDAQ market site, and I had just sold the 160 strike about 2 days earlier, and the shares of PMC Sierra were trading at like 255 a share. And it was crazy. It was absolutely crazy. And then it all came to a bloody end. Horrible. Yeah, it looks like Bitcoin. Yeah, you're right. Sam, and by the way, Italy goes down. Well, Europe will explode for sure. And Italy has plan B. 3 countries for gold reserve. World. Italy's the number 3 country with gold reserves? Is that what you meant? If that's the case, I was unaware of that. Okay, let's get back to these charts, and I'll let everybody go. I don't want to keep everybody here delayed. Interesting. Thanks, Sam. We'll leave off with the S&P, see what's changed here, and we'll answer a couple of questions. Alex, quick question. Does the stimulus package not help support the current market to go up as previous crashes? Here's the problem. It takes more and more stimulus to make the market go up higher. You get the more debt that we incur, the harder it is to make that debt help the market perform. So while in the short term it acts as an injection of insulin, like if somebody's got an overdose of heroin, they pump that needle right into their heart and inject some insulin. If somebody goes ahead and they start junking up again on heroin, as we continue to do, well, then they're simply going to overdose yet again, and they'll go into shock, and that's exactly what's going to happen here. I mean, think about, we have, what was the statistic I heard yesterday? I was listening to Peter Schiff, and in the first couple of years of President Trump's administration, we have incurred more debt than the entire Bush administration. If he's elected for a second term, and believe me, I don't want Bernie, and I don't want Biden. I think that President Trump was dealt a horrible hand of cards. But he's got to do something in the second term about this crisis. Keeping it going is not helping. We're going to have to take some hard medicine. And if he is elected, what the statistics are is that he will have accumulated more debt than Bush and Obama combined. So, where are we now? We're rolling over yet again. You have Yellen that's coming out. She wants the central banks to buy stock. For whatever reason, Yellen and Bernanke have been coming out of the woodwork, giving statements of late. And I guess they're trying to protect their pseudo legacies, which are absolute failures. Russ, you betting on Tesla? Why? Give me your thought process. Let's bring it up. I'm not saying you're wrong. I don't know enough about it. Here's Tesla. Oh, going down. I see. Gotcha. Now I understand. I understand. Why is Tesla not coming up here? Only when I'm live. Watch this. Let's see if it happens to me here. This is a monthly chart. Obviously some wicked topping action here. We're holding support. Yeah, we're flashing a weekly chart, we have a bear flag setup forming here. Still holding a breakout on a weekly basis. I would watch for a fade. Looks like we have a bit of resistance above here. There you go. 565 per share resistance. Just be careful. This is a similar setup you're seeing all over the place, is that you have your Stokes, which continue to rise, along with RSI. But price trumps all. So if we break here, I don't know whether I would short right here, right now. But if we begin to break down below the support level, look out below. In fact, let's create an alert. I'm not allowed to set an alert here. Wonderful. Okay. Okay. Sam, by the way, Bob, on lithium battery before coronavirus, $65 for a motorcycle. Battery now 78. Oh, so their input costs are going up. Okay. Interesting data. Thank you. Do you think AMC and Ford are cheap investments now, or do you think they will go bankrupt? AMC, the movie theater? No, I don't know their fundamentals, whether or not they're able to weather the storm here. I tend to doubt that they're going to let them go out. You know, this is AMC. Yes, AMC. Wow, they have a lot of debt here. Holy cow. Over 10 billion in debt. Who'd have thunk it? I don't know, to answer your question. That's a heck of a lot of debt to carry and service. Okay, great. Okay. Looking at the technicals, it looks as though on a monthly basis we're obviously bouncing here, but still a lot of pressure. We haven't had the rally on AMC as we've seen with the rest of the market. We're down below $5 a share. I don't like to see that. And believe it or not, short sellers become all the more emboldened. I was listening to Peter Lynch some time ago. Peter Lynch, the great investor who ran the Magellan Fund. And once you get a stock that's trading down below $8, $7 per share, it's not as though you have short sellers that are happy to book profits. They become more emboldened because the big time short sellers, their target is zero. They're looking to put companies out. So the fact that we're trading down below 4 doesn't give me the warm and fuzzies. I'd be looking here at the short interest to see whether or not there's a trade to be had here. But obviously I'd be worried about ongoing concern issues. Average daily volume, 4.25 million. You have a lot of shorts in this name. A ton of shorts. So I don't know whether or not they're going to be able to withstand this current environment. You can see we're setting up here nicely. A little W formation. We rallied off the lows. But we sold off yesterday, which is expected along with the rest of the market. Will they survive? I don't know. I believe that Ford, to answer the second part of your question, Ford, they have to bail out. And they'll probably get bought out by somebody else before the government lets them get or lets them go out of business. Let's check out. This is probably not going to look all that pretty. Total debt, nearly 157 billion in debt. My God. Incredible. Average volume, 89 mil versus what's our short interest? There aren't a huge number of shorts in the name. I don't think that we're going to get a big short squeeze here. But the chart is not looking healthy. Again, another stock down below $8, $7. I don't think they're going to let them go bankrupt, though. All right, folks, if you haven't hit that like button, if I could ask you to do so, I'd really appreciate it. And everybody have a profitable trading day. And really, please, if this is your first bear market, wait until the final minutes of trade prior to putting on a trade, making that decision. These guys out there, in particular, a lot of this trade you're seeing right now is all computerized. So let the markets play their games throughout the day. It's the close that matters. How are we closing out the day? Is it bearish? Is it bullish? Wait for that final 15 minutes of trade, and that'll really help you to figure out which way the markets are going to go the following day, or if you're looking on a higher level view, you want to identify how the chart's going to trade the following week. Again, wait till Friday. Wait for the back end of Friday to see how are we closing out the week. And tomorrow we're going to do Thursday night stock charts live. So join us. Smash that like button if you would. Tell a friend, and I will see you tomorrow night. Be well.